The ongoing demand for formal housing throughout South Africa has driven strong price in low to middle segments of the market. The value of price growth was the highest since the 2008 subprime mortgage crisis, with low-value price growth leading the pack at just less than 30%, followed by mid-value, high-value and luxury properties.
So what we're seeing is that the lower value end of the market has had quite aggressive price growth. And that's mainly driven by two things. The one is it comes off a very low base, so it's quite easy to achieve double-digit growth. And then the second thing is that that market is driven by buyers entering from the informal sector that's economically now powerful enough to actually buy a formal property. Now the spin-off effect of that we're hoping for and that we're starting to see in the next tier is that as these consumers or buyers grow themselves, they then move into the upper tiers of the property market. So it takes quite a long time for people to grow into a better market, but because you have a steady supply of people in each stage, we are now seeing the mid-level market breaking out of the normal trend. So that's basically the market where the average property prices is between 250,000 and 700,000 rand. And that's where, if that breaks out, then the next that we hope should follow suit is the 700,000 to a million bracket.
The banks have really loosened up to a certain degree. I wouldn't say that they're throwing money at the market, which is a good thing. So whilst they are certainly cautious, there is an appetite from the banks to lend money. It needs to be underlined by the borrower having a certain degree of equity themselves. Generally, there are a few 100% bonds being granted, but by and large, banks want to see between a 5 to a 20% deposit, depending on the area, the quality of the property, etc. But they've certainly indicated, and the numbers speak for themselves, that the banks are starting to lend again. But in a cautious way, which we're happy about. We don't want to see the free spending, free lending days of the early 2000s. It's not sustainable, and it doesn't benefit anybody in the long run.